Hello everyone, this is Tina, guest market analyst from FPG. Today is 12th June, Thursday. The US CPI came in cooler than expected, suggesting that tariffs have had not a major impact on inflation just yet and offering some relief to Wall Street. However, details of the US-China trade talks remained unclear, although US President Donald Trump signaled that both parties will stick to what they agreed last month, while Wall Street reacted to the news mixed. The Chinese equity markets continued their bullish trend, with the Hang Seng Index approaching the year-high level. At the same time, oil prices jumped to the highest in 2 months due to escalating geopolitical tensions between the US and Iran. Hopes of reaching a nuclear deal are slim. In today's video, I'm going to talk about the potential market trend of crude oil WTI and Hang Seng Index. Let's get started. The first one is crude oil WTI. So yesterday's surge has already broken through the pivotal resistance of around $65 per barrel, as well as 100 moving average. In the near term, the upside momentum could remain strong. Long target could be the high in April around $72 per barrel, as well as this long-term downtrend line, and previously formed a double bottom pattern, also signaling the potential long target around this level. However, stochastic has entered an overbought territory. After reaching this level, a pullback is expected. But in the long term, MACD signaled it's entered an uptrend. So there is possibility that they could continue breaking through this long-term downtrend line and targeting the next potential level, which is 23.6% Fibonacci retracement, as well as the highest level in January, close to $80 per barrel. But this level would require easing trade tensions between the US and its trading partners, which would improve the economic outlook globally. So on the downside, the previous pivotal resistance becomes a key support level, pricing between $65 to $66 per barrel. The next one is Hang Seng Index. The Hang Seng Index now is approaching the imminent resistance, which is 61.8% Fibonacci retracement. So this level is also the highest level this year, reaching in March. So the index has already had a breakthrough of the key resistance level, which is a 50% Fibonacci retracement. The 100-day moving average is still on its uptrend, suggesting the long-term bullish trend remains intact. However, at this level, a pullback is expected as stochastic has entered an overbought territory. The near-term support will be still on the 50% level. So only if it breaks through the near-term resistance, it could continue this uptrend. Otherwise, I would expect Hang Seng Index would be going into a range-bound movement between the two retracement levels. So this is today's technical analysis video. Thanks for watching. See you next time.